Good evening. This is the Elliott Wave update for the NASDAQ 100 and the S&P 500 for Monday, August 7th, 2023. I'm going to begin here in the NASDAQ. I'm on the hourly chart. I'm just going to dive right in. The market kind of continues to be a little bit range bound, you could say. It didn't make new lows. It did break late and continues to now to new session highs, or even just new highs from what coming off of our lows, but nothing to really be more clarifying of what even the hourly picture is. So what I can say is that I'm in minute 1, minute 2, so we're inside that minute wave 3, but I can't say that this is minute wave 3. We're still within inside of it, because if I did that, that would have to make this the 4, and the 4 overlaps the 1. Big time overlaps the 1. So this would say that, okay, we go here, this is 3, this is 4, but it's not. It's got to be inside. It has to be minuet wave 3, minuet wave 4, minuet wave 5. Minor wave, minute wave 3 then would go here. And then ready, again, encroaching back upon minute wave 1 in terms of wave 4 overlapping wave 1. And right now, the market's not being too go up or possibly violating. So again, it puts us inside this minute wave 3. And best I can do is 1, 2, 3, 4, 1 of 5, 2 of 5. And that's how I probably will count it, that this is going to be extending again. And it'd be the 5th that extends versus the 3rd. The 3 of 3 did extend, and that was great, but they pumped it too high here. And even if I go out and I just go and put it on the close on the line chart, it's still way over on this side. This still is 1, and that's a clean ABC for a 2. And now we're coming down. 1 of 3, 2 of 3, 1 of 3 of 3, 2 of 3 of 3. These are the possibilities that I got. Now, it's going to be really hard to try to balance all this against what narrative is being spun by the financial media, both on cable or just in print. So because this is the technical picture, these are the choices that I believe that we have right now. 1 of 3, 2 of 3, 1 of 3 of 3, 2 of 3 of 3, and we just fall off that cliff again. So we need to get this all wrapped up. The interest rate markets need to get themselves wrapped up and finishing. Also, they have some additional downside on the bond price rally over in the yields before a larger corrective phase for interest rates comes into play. And again, we are looking at the possibility of, we have 2. I continue to use as my preferred, that we're done with that primary B wave and we're heading lower. Now, the alternate count would suggest ABC, but even that, I'd have to put a C here. That suggests that the NASDAQ just needs to go. Now, a lot of people are going to say, oh, yeah, well, that's what it felt like today. Look what they did. They really took up all these stocks. It's like, yeah, but you've got some negative stuff going on in Apple. Oh, Apple will be okay, blah, blah, blah. But what if they turn and they start doing the same type of a trade, just adjusting? But we started in NVIDIA. We saw it today in Tesla. They always buy Tesla back up. But we saw them, they're starting to make adjustments, high tech. Whatever the difference is, whatever's going on, I think that we just need to be able to factor in the technical picture and cover the possibilities. So we're at a range right here where the market could just pick it up and go. Look at the Dow. The Dow is up 400 today. So is that going to be as difficult for the NASDAQ to do a 250, 300 point day? No. And from here, we're back up above 15,700. And everybody think, oh, that's fine. No big deal. We're, blah, blah, blah. But what it's going to produce is one big ABC. Because here is where we went down and put in a slight new low over this. When you look at the close basis, the low is actually on last Thursday, excuse me. So it's left open. Here's what we can look for. If the market's going to continue to move higher, I'm going to take it in one of a couple of ways. If I have to count 5 down to there, whatever the reason is, or that what is this actually bouncing against, then the couple of things, I can go from here to here, and I can go on this, so they'll all be retracements. Just want to, I'm going to go because we're only going right here for right now, and I'll straighten that out in a minute. And actually, you could go all the way over to this low. So right now, we're sitting just below 0.618. And that's just the rally off of the low from today. And that brings up to 15,504. That low was 15,334. So we're already 250 points above it. So again, when you look at the totals, you're like, well, the NDX was up 132 today. Not that bad. Actually, from the low, it was up a lot more. So again, ABC or down, and we put a label under here. And now we're going to be putting in a wave 2. We're already up to the top. Now that's one scenario, right? I'm going to remove that now. What else can we possibly be doing? Could this thing have literally put in a wave 3 low? It's so difficult. If I have, what a 5 of what is this going to be here? Minuet 3, minuet 4. We got a minuet 5 to put in minute 5. Possible. There's so many different things. Downside, we do have a fair amount that we could look at. And one being that we just start to match up minute 1 to minute 3. And again, here we have it. I could probably, that's pretty close. 15,338 was where wave 3, right, would be equal to wave 1. Okay. We got down there pretty much. We've tested it 3 times. Broke it twice, here and here, not by much, and then jack it right up above. So next level that would be reached is not necessarily those 2. So let me just clean this up very quickly. Put just the fibs that make a difference, and I wouldn't be looking for 2.618. So now we got coming off. If indeed wave 3 is going to be the longest and the strongest, that would be internal here, then it's going to be 1 of 5, 2 of 5, 3 of 5, 4 of 5, 5 of 5. And I think we get down here. There's that possibility. So we have upside. It's very limited, right about 15,550 to 60. It's very, it's already there. If we use the candlestick chart, the low is 15,483.75. And if we look here, what do we got? It's already traded above it. So much. But if it's going to continue to go up, we have the possibility that this is an ABC. And if that's the case, well, it's going to go above here, and then it's going to go above here, and then it's going to go outwardly of like towards here. As a minor 5, there you have it. Equality, 16,396. I left that one up. So those are what I'm looking for clarification. Now, intraday, that's the big catch. I think upside, we get caught up in here. Downside, if we don't break this level, will be contained here. So that's the possibilities there. Moving averages, yeah, you know, they're starting to slow. It wasn't, yeah, the trading was there, and if you caught it, great. It was possible to turn in some decent P&L early, and then again, you know, during the day. All right, over in the S&P, it's kind of the same story, but I'm much happier with this layout being actually what is in place. 1, 2, 3, 4, 5. Now we're in a wave 2. A, B, 1, 2, 3, 4, 5. We have a lot more room before it would become disqualified. So, and it could be a decent rally, even if I take it over and put it on the candlestick. Candle's 42. That low is 52. Yeah, it could get up there, of course. Can't say it won't. Because the outside, now the alternate here is that on the SPX, it's going to be the same setup, right? That we have a 1, 2, 3, 4, 5, A, and we're in a B wave, and that B wave is 45.40 to 45.56. That's just the B wave, and then we get a C wave. Back over to the S&P, how's that going to fit in? If we have 42 here or 52 here, and we could get as high, and what did I say, 86? 56. So I've got 42 here, or actually if I take this over and put it on the line chart, I'm looking at that as 45.62. And I think that we still could come up to 52, 54 and be done, right? If I just kind of go over and just put straight fibs, then we're taking 45.63 would be 50% for wave 2. It could go 618, and that brings us up to 45.79. As if this were a larger wave 2, which it is, it needs to be contained at the 50%. So it actually hasn't even gotten up to 382. But you're looking then for a pretty large decline. Now from here, I also can say 3, 4, 1 of 5, 2 of 5, and we do a 3 of 5, 4 of 5, 5 of 5, and then put in that minute 5, and still, you know, if this again under the alternate is wave A, and this is wave B, then we can get up here and then still do a C wave down. If I'm going to count it here under this count, I may be able to, it could go up further, but we're going to be looking at that it's an extension. 1, 2, 3, 4. So no violations there. 1 of 5, 2 of 5, and that gives it all the way up to 45.60. You know, and then still can come bubbling down. Not in a minor 3, but in, this is 1 of 5, right? 1 of this 5, 2 of this 5, 3 of this 5, 4, 5, to put that down here somewhere. And still then keep alive A, B under an alternate, but cleans this up and makes the pattern work without violating. So those are the same type of things that I'm seeing in both. This can have additional upside, and I can leave it right like this. And then, but the next number would be a nosedive. Even under each, I'm not looking for this just to go, 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 unless, and not even then, because even under the alternate, it's still 5 down. So it's an A and this is a B. And so we're still looking for a stronger leg down. So either case, this could be A, this could be all we get in B, maybe we get a little bit higher for the B, and then we turn it and we flip down in a C wave, which would consist of another 5 waves down. So like I said before, 1, 2, 3, A, B, C. We got a little bit more to go. So for tomorrow, cannot say that we won't continue higher, 45, 47, 48, 45, 48, we'll call it. And then 54, 55, which is where the 200 is, then 45, 63, above that 45, 71, and then 45, 79. Regardless of the count, those are the fibs. I'll figure the count. That's where the fibs are. And different scenarios, we already know what it just changes how we want to view it. But those are the levels. If it starts to break there, then we're looking for there. For breaks, we're looking for there, or breaks, et cetera, et cetera. Because if this all turns itself around and it's declared as ABC, right? 5, 3, 5, then it's just going to go. That's the alternate count. All right, I am going to leave it there. My count remains where I'm looking for continued downside. I don't really think that the U.S. being downgraded has been totally, dealt with. I think that a lot of it's going to come out in the CPI, and that's where a lot of interest lies right now in terms of what the Fed may or may not have to do, or how serious are we about it. Because I tell you what, there are, I'm not sure of the billion, but there's quite a large funding process that's going to go on, and they're going to be doing a lot of transactions. So they're going to be selling bonds, selling treasuries. So the auctions are going to be coming, and the amount is pretty large. The government needs. So in any case, that's going to have an effect on the bond, and it's going to have an effect on the yield, et cetera, et cetera. So we're finally getting, all of that put together, folks, because I really want to tell you, remember the pecking order. So when you want to see them getting all crazy about stocks, it's like, well, how they're figuring that into their picture is a model that I don't know what it includes, but obviously I'm hoping it includes interest rates. But at what level? Or do they think Fed's going to raise or not raise, or pause or not pause? So so many different models can get clicked and run. But I think interest rates continue to dictate what really is going to happen even in the little bit longer term, a little bit longer near term. What's going to happen after Wednesday? What's going to happen after Thursday? What's going to happen, et cetera, et cetera. All right, I'm going to end it there. Our next update will be on Tuesday, August the 8th.